Thanks very much. Just to clarify, so I'm actually chairman of Dynam Capital, the investment manager for Vietnam Holding. The chairman of the fund will shoot me for that. Good evening, everyone. Just want to give you an update on what we see as a great, still exciting market of Vietnam, and something to look through and cheer us up on these dark days when we see lots of noise in many other parts of our portfolios. So Vietnam Holding is a specialist fund focused on purely on Vietnam, listed on the main board of the London Stock Exchange, so easy to buy. And all we invest in is listed equities in the exciting growth market of Vietnam. We're a nimble fund, around about £100 million of market cap. And that means that we're able to invest in small, medium, and large companies and nimble around our stock selection and our sector allocation. And that's led to tremendous outperformance. And we've outperformed the index over 1, 3, 5, 10 years. Good level of alpha from that stock selection and also from that sector allocation as well. We're a concentrated fund, and we're concentrated for a reason. So we've got 25 companies, and that's so we can engage with each one of them to understand what they're doing, their market positioning, but more importantly, also to see where they're trending on their own journey of being better companies. So more than a decade ago, the fund became one of the first signatories to the United Nations Principles for Responsible Investing, UN PRI. And in the most recent report that they did, we received top scores of 2 5 stars. So top scores in PRI, and that's testament to the work we've been doing in doing more, measuring more, but also reporting more on our ESG journey, which goes back over a decade in Vietnam. Not only obviously are we a responsible investor, but we're an outperforming investor, and we were the top performing fund in Vietnam last year, and also one of the top 3 funds across the entire UK investable universe of funds. We're also, as a consequence of being listed on the London Stock Exchange, many of you will be familiar that funds trade at discounts to net asset value. We're the narrowest discount of a Vietnam fund, around about 15% discount to NAV. So there's still some great opportunities and entry points for investors. But we're really focused on delivering good growth on a 3 to 5 year horizon and being very transparent with our investors about the story in Vietnam. So we're an active investor, we're a nimble investor, and we're able to navigate from small, medium, as well as large companies in Vietnam. We're trying to do something very simple, and hopefully do that simple thing well, which is to find businesses where we've got good visibility on strong earnings per share growth, ideally compound earnings growth of north of 20%, reasonable valuations. I mean, our portfolios run about 10 times PE. Some of our stocks are single digit, some of them are 19, 20 times PE, but across our portfolio, a reasonable valuation. We're looking for sensibly managed businesses, kind of defensive moats, strong balance sheets, low level of gearing, but also importantly for us, management teams and boards of our portfolio companies that will journey with us, that are transparent, that we can engage with about our responsible investing imperative, which for us is not so that we feel great in the morning. It helps us to sift through the opportunity, select the great from the good, but also to provide some downside protection. So you're not investing in companies that are going to have blow ups on either corporate governance or environmental aspects. So Vietnam is Asia's emerging champion. Just I think in the Nikkei this morning, or maybe the Financial Times, many markets suffering kind of slowdowns. Vietnam is still growing. Country is on its 30-year trend of 6.5% GDP growth. Now, last couple of years during the pandemic, the growth was half that. It was about 3%, but it was still growth. And we're seeing that kind of multi-decade level of growth being driven largely by strong foreign direct investment. Manufacturers looking to locate some or all of what they're doing to Vietnam to take advantage of Vietnam's many trade agreements, bilateral and multilateral trade agreements, which are driving a very open economy, 200% of its GDP through through import and export. And so that foreign direct investment is positive. That level of export goods, the trade surplus, is positive for the economy. And there are actually many Vietnamese that live outside of Vietnam and send money in each year, so inward remittances. And each of these is about $20 billion. So the country is building up quite a defensive base, which is going to help it navigate through globally these kind of choppy waters that we're in. For the last 30 years, Vietnam's been a big exporter of stuff, broadly defined. So in the 90s, things such as furniture, rice, raw materials. But now Vietnam not only is still exporting those things, it's a big exporter of coffee, second largest coffee exporter by volume in the world, big exporter of seafood and aqua products, but also digital products. So it's a very large manufacturer on behalf of Apple. It's got 30 or 40 kind of sub-assemblers for Apple making these iPods, my MacBook. Half of the world's Nike and Adidas trainers are made in Vietnam. Most of my wardrobe is made in Vietnam. But also interestingly, Vietnam's moving up that value chain. So Samsung, which is a big investor manufacturing tablets and phones, has recently announced that it's going to manufacture something called flip chip and ball gate arrays. I mention that not because to show I know what those things are, even though I do, but those things are made in South Korea typically, but they're being moved to Vietnam. So Vietnam's moving up that value chain. Vietnam's also got companies that are exporters of software and services and outsourcing. So it's a very interesting and well-positioned economy that's seeing tremendous changes to the wealth of its people. So the Vietnamese are getting wealthier. GDP per capita's trebled in the last 20 years that the stock market's been around. And it's just gone recently past $3,000 per capita, which means Vietnamese people are consuming. They want to travel, have holidays, spend money, invest in the stock market. But that consumption is also at a confluence of the growth in modern trade. Vietnam is a country that's got still a relatively low level of urbanization, less than 40%, which is where Western Europe was just after the Second World War. So it's a tremendous runway of investment potential in roads and bridges and new cities and new housing development. And that also means things such as hospitals, schools, and modern trade, shopping malls and convenience stores. So there's plenty for us to look at in terms of exciting investment themes. So on the left is the GDP story in the big picture, 30 years of 6.5% growth, one of the biggest growth, highest growth countries in the world, and certainly one of the biggest in Asia. And then the chart on the right is how that means in terms of GDP per capita and the inflection point that when other economies such as Thailand and China a number of years ago reached that level, they doubled again in terms of the size of their economy. So Vietnam's a very interesting time. If you have an investment horizon of 3-4 years, it's definitely worth having that into your portfolio. So absolute growth is high, $500 billion economy by 2025. It's going to be one of the largest economies in 20 years' time. It's also a big outperformer in terms of its economy in Asia. So strong growth even through those 2 pandemic years that we've just emerged from. The domestic market is growing strongly, so that's a very big positive for Vietnam. But Vietnam is part of the global economy, and the government has 3 initiatives which are aligned with us as a foreign investor. One is to see Vietnam become a modern industrialized country. One is to see Vietnam become that made in Vietnam center, the key part of the global supply chain, but also to see the wealth of its people rise up. Now, it is a big exporter. So as tastes and change are forced to change because of inflation, what Vietnam exports might also change. So a US housewife or house husband might say, I want to buy a cheaper source of protein. So they might look to Vietnam to get some perhaps cheaper seafood. So Vietnam can still win when the world is kind of cautious around its basket and what it wants to buy. Inflation isn't the same issue in Vietnam it is yet in other parts of the world. And we'll come on to that, but inflation's still modest and manageable. But Vietnam's not sitting on its laurels. The government are very closely watching what's happening and to see Vietnam continue its growth trajectory. For us, the domestic consumer growth is really important and exciting. But that's only part of the story. The other part is Vietnam's position as this manufacturing hub and part of the global supply chain. You've got a young, large population, very industrious. And then Vietnam has, say, positioned itself with many free trade agreements. So it makes a lot of sense for manufacturers to come to Vietnam. Over the last couple of years, we've seen manufacturers move out of China, some or all of their manufacturing to Vietnam. We've seen, as I've mentioned, people like Samsung do more. Apple is doubling down on what's made in Vietnam. Intel, the US semiconductor company, has a big assembly and test business in Vietnam, and that's doubling down on its investment. And Lego, recently this year, they announced their 7th factory in the world will be in Vietnam. And that'll be $1 billion, and it's going to be Lego's first green factory. So you've got supportive policies. Vietnam is a communist country, yet it gets what's needed. It needs to be an open player. It wants to be a friend to all and servant to none, and build this diversified mix of trading partners. But back to that domestic story and the 100 million people and the rise of the middle class and the rise of the consumer. So car ownership's doubled over 5 years, but actually it's still a tiny percentage compared to the rest of Asia. Millions of motorbikes, but not so many cars yet. And a consumer that wants to consume, wants to buy life insurance policies, that comes back into the capital markets, and wants to experience and travel both domestically and internationally. And domestic tourism is massive in Vietnam this year. It's much higher than it was pre-pandemic. So it's not just a kind of rebound effect, but it's just as the population is getting wealthier, people can travel and they want to consume and experience things. And also digital things. So the internet economy in Vietnam is growing rapidly by about 30% per annum. So e-commerce is a key driver. So the macro is resilient. Retail sales have recovered. Now, partly this is base effect. They're recovering strongly from last year when there were shutdowns during pandemic. But actually, many of our retailers are seeing growth at levels higher than pre-pandemic. And then on the manufacturing side, it continues to bounce back as Vietnam was very quick to reopen after the pandemic. It wasn't locked down this year in the same way that China was or Hong Kong. So it's very quick to get its manufacturing back on track. A broad mix of partners, as I mentioned, in terms of Vietnam's network. US is one of its largest export markets, and growth has been resilient to many of its trading nations. Interestingly, the big growth in exports to the US means Vietnam's earning US dollars, and everyone wants US dollars because they're worth more than most currencies in the world. And so it has a surplus to the US, where it has a deficit actually at the moment from countries whose currencies actually weakened. So at the moment, Vietnam's in a relatively good position. Again, it's not taking that position lightly. And the debt levels are relatively modest, under 40%. So Vietnam, as an emerging market, hasn't got some of the issues that some other countries are facing in terms of rip-roaring prices and collapsing currencies. And I'm not talking about the UK or Europe, but more classic emerging markets, perhaps. So Vietnam's got a very strong economy and is still seeing good growth. Yes, there are rising foreign exchange risks globally, and we're seeing a strong US dollar. If you look back over 30 years, you'll see that on average, Vietnam's currency, the Vietnam dong, has devalued by about 2.5%. So in the early 90s, I could buy a can of beer in Ho Chi Minh City for 9,000 dong, which is about $1, and now it's still $1, but it's probably about 20,000 dong. So about 2.5% per annum. Yet over the last 5 years, the currency's been fairly stable and actually appreciating, except for this year. So this year, the currency is down about 3%. Whereas obviously the yen is down 20%. Let's not talk about sterling. Euro's down, and the Asian currencies are down. So Vietnam so far is maintaining a strong position. Part of the reason why Vietnam has not suffered in the same way that Pakistan, sadly, which is bankrupt, or Sri Lanka, which is somewhat bankrupt, is that it's got good energy security. half of its energy is supplied domestically through hydropower, domestic gas, or renewables in the form of solar and wind. And then half is through coal, and a lot of that is also domestically sourced. So the kind of net deficit or the trade deficit for energy is relatively modest, about 1% of GDP for Vietnam. So it's not importing so much inflation. And when we compare Vietnam, say, with the US, where inflation is much higher, you can see, Vietnam, a large part of its basket of goods is food, and Vietnam is a producer of food. In the US, transportation is a big part of the basket of goods. In Vietnam, that's less of an issue, less energy consumption per capita, because it's still at an early stage of development in that regard. So we think inflation is increasing. It's going to be likely 4% by the end of the year, and may peak next year in Vietnam, but still not the levels that we're seeing in Europe and in the US. So in summary on the macro, busy slide, but the point being that it's been a strong macro position. Interest rates have just been increased on Friday by about 100 basis points, the first time in a couple of years. And that's because everyone in Asia is raising their interest rates following what the Fed's doing. But still at relatively manageable levels, 4.5%. So we're an investor in the stock market, in the equity market. So yes, the macro is very important, and that drives a lot of behavior. But for us, the great thing we've seen is a tremendous growth in the importance of the capital markets in Vietnam. So when the fund was launched, the market size of Vietnam was about $2 billion. It's now well over $300 billion. And daily liquidity has gone up, it's trebled in the last 3 years. Vietnam's the second most liquid market in Southeast Asia, just after Thailand. And then in the recent sell-off, liquidity has come down a bit, but it's still much higher than most of Southeast Asia. And yet the pricing in the market's also come down. So we still think that there's good growth at reasonable valuation in the Vietnam market and more liquidity. So the market's a profitable market. If you measure a return on equity in Vietnam, it's ahead of most of Asia. And yet the price earnings ratio is still modest at between 10 and 11 times PE. For all of the great attractiveness of Vietnam, it's got all the benefits of the good parts of an emerging market, yet it's still classified as a frontier market. It's 30% of the frontier universe. And it's got one of the largest market caps and the largest market in that index. So many UK investors may be invested in Vietnam, or many frontier investors certainly. But the kind of the big thing that people are waiting for is still probably a couple of years away, which is when Vietnam will get included in the emerging markets proper category. And that would lead to much higher flows of foreign capital. Market will re-rate. But as I say, that's at least 2 years away. The Vietnamese government wants the capital markets to be a key part of its economy. The Prime Minister was in New York in May, ringing the closing bell on the New York Stock Exchange, encouraging US investors to Vietnam. And there are some impediments to be included as a proper emerging market, and they're being addressed slowly but surely. Part of the benefit to us as investors is they're putting in better infrastructure in the stock market with lower settlement, central depository, and they're also providing more instruments to invest in and improving the level of English that's reported by listed companies. So slowly but surely, Vietnam's doing everything, and it's surely just a matter of time before it gets considered and then notified and then finally included in the emerging market proper. So our approach is a simple one. So our team, 14 people on the ground in Vietnam, are looking to find good businesses, well managed, in a combination of a top-down as well as a bottom-up approach. And we take that ESG, that responsible investing, seriously because it suits our investors. It provides downside protection and enables us to sift through the 1,600 public companies to get to 25 that we think are worthy of being in our portfolio. So snapshot of our portfolio as of a week or so ago. We're concentrated. Our top 10 accounts for about 67% of the net asset value. Across key sectors, the urbanisation story, the industrialisation, and the domestic consumption. Some of our top names we've held in our portfolio for a long time because they're such great compounders. FPT, our number one position, has compounded its earnings by about 35% each year over the last 5 years. P&J, 25, 30% compound earnings. So these are great businesses to hold and have in your portfolio. But yet we are nimble, and we've added to some other positions that have done really, really well. And over the last couple of years, we've added a few more banks to our portfolio. So we're conviction driven, and we're really looking for great compound earnings in our portfolio companies. As I said at the beginning, we're nimble. We're able to invest in small, mid, and large caps. One of our businesses, the jewelry business that I mentioned, when we invested, it was about $200 million in size. It's now 1.2 billion. So it was small cap, it's now large cap. And so we're able to navigate across the whole spectrum. And we've demonstrated outperformance, both in a rising market. Last year, we outperformed strongly. And this year, in a falling market, we're still outperforming the index and the broader investable indices, as well as many of our competitors. This chart really to show two things. One is obviously the good performance on a 10-year basis of Vietnam Holding. Secondly, to show the outperformance against the Vietnam index, but also the fact that Vietnam's a diversification play. So the correlation of the Vietnam index to the broader world market and the emerging market is low. It's less than 0.4 times or 0.4. And yet we can deliver outperformance to that. So Vietnam can be considered both as a source potentially of diversification, but also of alpha generation. So we do things simply. We've got a strong commitment to the responsible investing mandate we've set out for our investors. Top scores on the UN PRI latest report, but we're also involved in advocacy. So it's encouraging our portfolio companies to themselves do more, measure more, and report more. And although we're a relatively small investor in some dimensions, we get calls by our portfolio companies to help them in their own reporting on sustainability. Our carbon footprint approach is being mimicked by a number of our portfolio companies. And my business partner, Tin, co-founded the Vietnam Institute of Directors. So he's a leading voice in good business governance and good corporate governance, and actually gives training to people that want to be directors of Vietnamese companies. So in summary, before I perhaps go to some questions, Vietnam's been a top performing market. Valuations are increasingly attractive. Eventually, it will be included in the MSCI emerging markets. We don't know when. It's a couple of years away at least. But the key thing is that the government are doing the right things. The government's ambition to have Vietnam as a modern industrialized country with green growth. Vietnam committed to net zero by 2050 last year in Glasgow. So it wants growth, but not any cost. But it also wants to raise the wealth of its people and sees the stock market and the capital markets as very important to achieve that goal. So you've got a government that is stable. You've got a government whose people follow what the government says. And you've got a government that is aware of what foreign investors want to achieve. And so there's good alignment, I would say, between where Vietnam's long-term plans are and you and I as investors wanting to make good returns and diversify our portfolio. So there's a summary there of Vietnam Holding. So it's listed on the London Stock Exchange, trades at a discount, which is an opportunity for some to buy in. We give a daily net asset value estimation, and you can trade the fund through your broker or through your online platform in the UK. But perhaps I'll leave this slide on, and I'll take perhaps some of the questions that people may have.
Excellent, Craig. Thank you very much for another informative presentation. So the questions have been rushing through as you were speaking. So we'll start dealing with those now. There's a really interesting one here about onshoring and this kind of, particularly after the pandemic, I think we've seen this emphasis on, having your own food base, having even countries wanting to develop more of their own medicines, more manufacturing bases. How worried are you with that trend?
I think if I was in China, I'd be more worried, because I think that's the bigger risk, is that China manufacturing is going to be moved away from China to a certain extent. Vietnam is a friend to many. It's a friend to China. It's a friend to Europe, a friend to the US. So it makes sense to move manufacturing towards Vietnam. So unless you think everyone's going to make everything in their own country, an end of globalization, then Vietnam's still going to have a very important role to play in that global supply chain for intermediate goods as well as for finished goods. And you're seeing some sticky investment come in on exactly those reasons. So perhaps the changing supply chains, we saw that during the pandemic. We saw that because of trade attacks on China, between China and the US a couple of years ago. And Vietnam's kept a relatively low profile and done everything right to make itself an attractive place to manufacture. So I'm sure there will be some onshoring. I guess Mexico is going to do well, and North America is going to pull back many things. But you can't onshore everything, I don't think, particularly if you want to service also the Asian market. And so Vietnam has a great location within ASEAN, a good location within North Asia as well. So it makes sense, which is partly why Lego, as they put there, only the 7th factory in the world in Vietnam.
And you mentioned China. I think I remember reading something almost a year ago now, where you've got these persistent lockdowns in China, and a lot of multinationals are actually looking. I think Vietnam was mentioned in the article, because, as you say, it was able to open up sooner. Is it still benefiting from that kind of COVID disruption and from its strong track record?
It is. I mean, no one wants to benefit from COVID. It certainly saw a lot of manufacturing interest in Vietnam and more production being made in Vietnam during the pandemic. But I think obviously, we want people to travel to Vietnam as tourism, which they can do. And the Chinese used to travel, but they can't because they're still kind of locked down. It's hard for Taiwanese companies to visit Vietnam to expand their operations. So, having these countries locked down doesn't help particularly globally, but Vietnam has benefited because they opened up fairly quickly this year. No travel restrictions. The tourism's bouncing back as well as trade. And Vietnam airports are very busy and the resorts are packed. So, Vietnam's totally open and totally back to business. Whereas, unfortunately, I hear that, parts of China are still very much suffering, and Taiwan, I think, still quarantine, and Hong Kong has had high levels of quarantine and restrictions. So Vietnam was successful because it had a very successful vaccine rollout at the back end of last year and got the whole population double vaccinated within about 6 months.
And was that on the mRNA vaccines, or are they using the Chinese?
No, it's on mRNA, so Moderna, Pfizer, all those, the usual ones that we have 3 or 4 times in our arm. They were the ones that Vietnam took. So they were slow initially to get vaccine, but then once they did, they rolled it out rapidly and everyone was compliant and 100% almost double vaccinated by the end of last year.
And in terms of decarbonisation, I know you mentioned that obviously the green agenda is very relevant for the government there. What's the energy composition at the moment? The question asks, are they heavily dependent on fossil fuels? But also, I think, are they dependent on gas? Because, what we're seeing, obviously, in the region with China rushing, there's a huge demand for gas in the region, and we're seeing the price consequences of that. So what's their energy security situation like?
Yeah, so 50% coal, which is not good. And then the 50% really is through much cleaner energy, 30% hydro, and then 10% renewables and probably 10% gas. So the key issue there is coal. So having made that commitment to net zero by 2050, Vietnam will probably get peak coal by about 2035 or 2040, but it has to get rid of that coal. And so there's been a big push over the last 5 years into renewables. And actually, Vietnam has, I think, one of the lowest levelized costs of electricity from solar and wind. And so it's been attracting a lot of interest into the renewable space. If you asked me the question 10 years ago, Vietnam was going to push towards nuclear. But then obviously with what happened in Fukushima in 2011, nuclear was off the agenda. But renewable has come from nowhere. So hydro was half the energy mix 10 years ago. But non-hydro renewable is a very new thing in Vietnam. But it's already close to 20% of the energy mix. So there's an ambition. There's great wind potential, long coastline, tremendous solar potential. It's very sunny in Vietnam. but they need to invest a lot in the grid infrastructure. So at the moment, there's more solar and wind electricity generated than the grid can actually take. So they're looking at ways of, how do you convert that maybe into ammonia production or into hydrogen production. So there's a lot of opportunities for Vietnam on that decarbonization trend. And there's also a big push around reduction in plastic waste and environmental concerns, because Vietnam's low-lying, so would be an issue of climate change and climate risk, and requires the rivers, and so Vietnamese are very much aware of their environment, and so the government was brave to say net zero 2050, and now there's a lot of push for companies to do more and report more, and say we're giving some of our portfolio companies assistance in that.
And presumably the energy infrastructure sits within the remit of the government. It's under public control, and the government has the muscle to push these forward. I imagine from what you're saying, it doesn't have a privatized energy infrastructure.
So it has a state-owned monopoly in terms of distribution, but no, generation can be in the private sector. So most of the renewable energy, it's private companies. Foreign companies coming in, investing in wind and solar, big Japanese companies investing in coal historically, but also in more readily now in gas, looking to do LNG, perhaps with some US partners as well. So private sector has a great role to play in energy generation, but at the moment the distribution is still under state control. Yeah.
And there's a question here about the stronger dollar. I know you did allude to this earlier in the talk, and it's obviously the thing that tends to spook the horses when it comes to emerging or frontier markets. But you, just in case the questioner had missed that, you were saying that Vietnam actually has some advantages on that level.
It does. Look, a couple of advantages. One, on energy. So unlike, say, Sri Lanka or Pakistan that have to import pretty much all their energy, Vietnam doesn't. It's produces a lot of its own energy. It exports a lot to the US, so it's earning US dollars, which is strengthening, and it runs a small deficit with supply countries where the currency is weakening more. So it gets short-term advantage there. However, the US dollar strength is hurting everyone, let's be honest, and many of the Asian economies have seen their currencies fall further, and so Vietnam needs to maintain that kind of competitiveness as well. So the government are clearly looking at this carefully. They have good foreign reserves, so they can defend the currency, but they're also actually wanting to make sure that it remains very competitive for its manufacturers.
And you mentioned digital commerce quite early on as well. And I think, again, there was a fascinating thing in The Economist, I think a few months ago, about these kind of homegrown, particularly in ASEAN, also in India, where you see these e-commerce ventures, these delivery vehicles. Are they actually are you seeing a trend of kind of IPOs? Are they actually getting to the Vietnamese stock market? For a fund like yourselves, what's the potential for you to get into those kind of businesses?
So Vietnam's attracting a lot of startup interest. It's not a sector we invest in, but it has positives in terms of the digital companies that we're invested in and the services and the infrastructure generally. But Vietnam's seen as a place to try things. So it's a low cost to fail. You can try something in Vietnam in terms of an e-commerce startup, and you can pivot if it hasn't worked. And then low cost to scale. So if something's successful, you've got a fairly large homogeneous population, so you can try things out in Vietnam. So I think TikTok is trying a payment solution out in Vietnam. You've got businesses that if they can be successful in Vietnam, maybe they could then export that to Indonesia, much larger population. So a lot of interest. I say it's not something we invest in from the fund, but our number one company is a big digital services business, so it benefits when there's more data consumed and data centers and that kind of thing. So on the periphery, but I think it's interesting for the adoption of digital means by our consumer companies that we're in. It gives productivity gains, helps them get market share, and be more efficient around that. But just interesting to see. So Vietnam, yes, is a very attractive kind of startup scene. But most of those, if they were to list, interestingly, I suspect they'll seek, maybe a NASDAQ listing where, tech companies get higher valuations than they do in Asia, broadly defined.
Yeah, that's something that we've seen, for example, in India.
Yes.
And when it comes to manufacturing, I remember hearing this metaphor. You'll probably be aware of this. Is it a flight of doves in the ASEAN countries? The idea that manufacturing kind of migrates from one country to another, and it helps turn them into more of a domestic consumption-based economy. Manufacturers then start to look elsewhere for those cheaper returns, and the kind of, it's that, dare I say it, that almost trickle down thing that the wealth spreads. Where do you think is that something that you're seeing, and where do you think the next destinations might be in ASEAN? Are there any countries you see looking to Vietnam's example and thinking, oh, well, we could do that?
Well, you've certainly seen through all that foreign direct investment over many years, the Vietnamese people get wealthier and the economy gets stronger. So it has worked. I think there's flighty investment in the sense of, to your dove analogy, garment manufacturers, they could move to Bangladesh or to Myanmar, even though they can't go there now. But where people are making these perhaps stickier investments in big semiconductor assembly and test businesses or large scale factories, that's very sticky. So they're looking at 20, 30 years of being in Vietnam to do that. So Vietnam's got a labor advantage. It's low cost, lower than India, lower than China, lower than Mexico. But over time, over 20, 30 years, we'll obviously have to kind of look at other sources of competitive advantage in the same way that other parts of Southeast Asia have matured and yet found their niche. So I think we're at a demographic sweet spot for Vietnam now, and we're at a place where it still has tremendous advantage in terms of manufacturing and generating the wealth for its population. And in turn, the domestic consumer gets wealthier and drives compound earnings in our portfolio of retail companies as well.
And I think, for an external investor, for a fund manager, like you and your colleagues, I guess that concept of stickiness is a really interesting thing to, for you guys to interrogate and to look at when you're choosing your holdings, isn't it? Because I think, as you were saying, it's that durability that's really going to make it. We know Vietnam is a tremendously exciting country, but it's that durability that's going to make it a good portfolio for our investors.
It is. I mean, the big export story of Vietnam, we don't typically look at an individual company that's manufacturing Nike trainers. We're looking at the business to business linkages. So one of our large positions is in Gemadep, the second largest seaport operator in Vietnam, and also an investor in the leading air transportation business. So it's kind of selling the shovels rather than trying to be the gold miner. So we try and find broader ways to play some of these themes. And then also some of the banks that have good exposure to broad parts of the economy around that. So you've got to look at good sectors, but you've got to be a bit clever as well to see how you lower the risk by not concentrating in one particular company, and perhaps look at the trends and the drivers that are going to be these compounding earners over 3 to 5 years. And say we're fortunate, we have a number of those already in our portfolio that have compounded at 30, 40% over the last 5 to 10 years. And hopefully we can pick others that will continue to do so going into the future.
Excellent. We will all keep our fingers crossed. Well, Craig, thanks again for such an excellent presentation and for taking the questions. And I'm sure we will hear from you again before long.
My pleasure. Thank you very much indeed.